Hello, and this is not a daily planning, but rather some requests from one of people that watch my daily planning. Let me just whip it up real quick. So it was on the 25th of February. Someone, Ray, asked about reason and thought process when I'm taking the trade. So I just happened to take the trade. It was March 2, and let's just see. So, first of all, we want to see the context of the current market. I already shared it to you previously, a bit early this afternoon, a bit sick there. So, no video for today, but just a quick written post here. Okay, let me give you a quick run up about what happened in the past few days, what I want to refer, and what not. Let me check. Is it Sunday? No, we're going to Saturday. Yes, this is Saturday. Okay, so in Saturday, we have lots and lots of shorter here. We have price going down, but while open interest is going up. The classic textbook of shorts opening. So they are the ones that grind the price down. But on the maximum pivot here, they have no continuations. Okay, so contextual phase, we have lots of shorters piling here from 65 to 63-ish, but have no continuation. And what happens? A bit later, on that Saturday night day, yep, Saturday afternoon in my time, they are getting wrecked bit by bit. We can see that the flow of open interest is getting reset bit by bit, and then they try for another attempt here on another short, still getting wrecked. Longs also participate for bit, also getting wrecked here, but most of the time where they have imbalances in open interest, there are more shorters that are opening their price, and also more shorters are getting wrecked. As far as I have seen from the flow, there should be, in a span of 2 days, around 3 to 4 times shorter opening big positions and getting wrecked. Okay, so for example, this is on Saturday night in my time. Price going up, open interest going down. Classic textbook case. Okay, and we see nothing here, nothing for bid, both getting wrecked. Okay, and then this accumulation area, both sides are accumulating the positions, big longs here. Okay, another shorts getting wrecked, another shorts consecutively getting wrecked here. So that's 3 times. Another big long here, but unsustainable, also getting wrecked. There's a big short here getting wrecked, and those longs getting wrecked. Okay, so that's the connector phase. If you see, for in my perspective, there are a lot more shorters in these areas than longs that are getting wrecked. So for me, it will be easier for the counterparty to push the price further on the opposite sides. In this case, since we have those shorts earlier building up their positions, if they unwind their positions, they are also saving the counterparty, which is the long side, easier and less effort to push price further in. Therefore, They already done like 3 to 4 times going for shorts, getting wrecked. At this time and at this point, they might not have enough drive to push the price lower. So that's my conclusion for this one. Longs are preferable. Okay. Then after I make the daily trade, let's see, where's it? Is it? Oh, on 5. Okay. This one. I also happen to notice by the time I make this post, I saw that on this particular letter book, or the book I mean, or you could say dome. I don't know. I don't really care. I saw that there's a big bit here on the 64K. So there's about 1000 delta on 64K and 64.1K. A big bits there. So for me, another confluence. Okay. Then hopping on to this, I put my alarm first on this, get triggered, and the first thought that came to my mind was this was a heavy selling volume. Why would I bother to counterpart on the first occurrence? And if there's a quick reaction, there shouldn't be in a minimum amount spent. Oh, god damn. Okay, I missed it. It's okay. All good. So continuing, on the first occurrence, there's a huge selling volume, and I'm not keen to counter trade it immediately because what's the point? I don't even know if this is gonna continue or not. Better to just take it slow and watch the price unfolds, which we do. In this case, after the selling volume, if you're not using your order flow, you would see that every buying attempt, which is the counterpart, has lesser than usual volume against their counterparts, which if we see here, every buying volume has less volumes than the selling ones. And we can see that here we have buying volumes, big candles, and afterwards a huge selling volumes, but it still get absorbed here. The momentum just vanished for the selling counterparty, for the selling part. Hence, I believe this is a better chance to open longs after watching it a bit more, just for confirmations, because we are using naked charts mostly, right? So if we want to preserve, we want to give up our risk, I mean our reward, for better confirmations, better probability for you to receive your reward in the first place. Okay, if you are using order flow, it's gonna be another options. See, in this particular part on 710, we see a huge opening of longs and a huge of bodies volume here on 65 725 until 65 650. So around this, is it, wait, let me check, 710. So around this particular area, since we are in 1 minute, let's just block it out. 65 720 ish to 65 650. Okay, so this, okay, these are the blocks of people that are opening longs. At the first few minutes, they are underwater, but in the order flow, we see a bit of open interest getting wrecked from those longs. Afterwards, what we see, it's not longs that are getting wrecked, but rather it was shorts that getting wrecked. That for me is also another confluence, if you're using order flow, that the counterpart right now is weaker than previous attempt. OI getting decreasing and price increasing. Shorts are getting wrecked. At the very least, they close the position. At the worst, they get liquidated, which I don't know because I don't have any liquidations charts here, so I don't know if those shorts are getting liquidated or not. But what's more important is now we have more confluences, and we see on these blocks, we see that those longs that are opening their positions on this particular block are defending their positions. That for me is the reason why I'm taking a trade. So invalidation is very clear for me because if price were to delve below their initial positions once more, I'm pretty sure and I believe they will also close their positions and price will also goes down further. So invalidation is pretty clear. Okay, and then the take profit for me is the daily view up, which also happens to be our weekly view up since we are in Monday. Why? Because it's on Euro session, and from my past data, if price doesn't reach my take profit and it already reached and switching to New York session, usually what happened is like my previous gold trades, which I got invalidated, it wicks and then immediately went to my TP. Therefore, if I'm opening trades in Euro session, I'm being conservative. But hear me out, do note that that is based on my own journal. Keep what's best based on your own journal, okay? So that's it. I hope you learned something from me and see you on the next chance, I guess. Probably tomorrow on daily planning.